Good morning once again. Hope you are able to hear me and able to see the screen.
Yes, sir.
Yeah. Last session, we have discussed the chart of accounts part. So in that, we have discussed what are the different types of chart of account and what is the structure. First, we will create chart of accounts. We have already created account groups and GL masters. We are going to create an GL module, right? And we discussed like what do you mean by an operational chart of accounts, what do you mean by group chart of accounts, and country specific chart of accounts, right? Out of three, operational chart of accounts are mandatory, right? And group chart of accounts and country specific chart of accounts are optional. As per the requirement, we will create it. And we discussed that chart of accounts, we can have a 1:n methodology, and we have one more method called 1:1 methodology. So if the client is going for 1:n methodology, did I start a recording? So 1:n methodology, in the sense, what is the advantage with the 1:n methodology? One chart of accounts can be linked to number of company codes. All member company codes, we can use only one chart of accounts. And what do you mean by 1:1 methodology? One chart of account will be linked to only one company code, and for consolidation purpose, we will create one more group chart of accounts, right? Here we have three company codes, BI01, BI02, BU01. Each company code is having, it's a different chart of accounts. So what is the difference between these two? In the sense, when we are following 1:n methodology, means one chart of accounts to all member company codes, then intercompany transactions are possible when we follow 1:n methodology. Cross company code costing is possible when we follow 1:n methodology. Clear? So again, I'm saying whenever you are working on intercompany transactions, right? If organization is having an intercompany transaction, in the sense, what does it mean? The company is following their chart of accounts and 1:n methodology. If the intercompany transactions are there in that organization. If there is no intercompany transaction, then they are following 1:1 methodology. Clear? Any questions still here? And we have created account groups also. So the GL masters, what is the chart of account length? We can give maximum of 7 to 8 digits, sorry, maximum of 10 digits we can give. And in real time, they will use 7 or 8 digits maximum, right? Again, depends upon the volume. And next one, in this particular project, we are going to use the GL account, number ranges 6 digits. So we have created, these accounts are classified into two different categories. One is balance sheet accounts and profit and loss accounts. So we have, in general also, they will follow in the same way, 90% companies. Liabilities, we have taken 1 series. Assets, we have taken 2 series. Incomes, we have taken 3 series. And expenses, we have taken 4 series. So liabilities range, we have given 1 lakh to 1,99,999. Assets, 2 lakhs and 2. So in this particular range, we can create all the liabilities. 10,000 range I have given. So we can create all the liabilities in this particular list. Assets, we can create under this particular. Incomes, under this. So we discussed what do you mean by grouping and marshalling in the last session. Clear? And expenses, in this particular group. Okay, once we have done, we have created account groups also. We have created account groups also. So, and here I explained that FI, we call it as in GL accounts, and in CO, we call it as in elements. We won't call in CO part as in GL accounts. We are going to call it as in elements. CO is nothing but your controlling. That is nothing but your cost and management accounting. So in cost and management accounting, we don't have a liabilities and assets. There is no concept called liabilities and assets. So that's the reason the data will not flow as a liabilities and assets data will not flow from FI to CO. That's the reason I have mentioned it as no elements, because there is a no concept called assets and liabilities. And in FI, we call it as an incomes. And here we call it as in CO, we call it as an revenues, right? And in FI, we call expenses as an expenses accounts. And here we call it as in cost elements account. Clear? Any questions till here? And I think we have completed retained earnings account also, right? Yes, no? Hello. Have we completed retained earnings? I think yes, I believe we have completed retained earning account part also. 1,10,000 we have given. Yes, no.
Yes, no.
It's completed, right? What is retained earnings account? That's the reason. Please make a note of it every point. So that would be easy to reference. Also, it would be easy for you people. What is retained earnings account? What is retained earnings account? Retained earnings is nothing but whatever earnings company earns, right? Profit. Clear? So that normally need to distribute to its owner or shareholders, right? So here retained earnings in the sense, for example, 1 lakh rupees, they got a 22 profit, 22-year profit. So what company will do is company will not distribute the total profit to its shareholders or owners. Out of that, okay, they will keep some amount aside. They will retain it. Okay, they will retain some earnings, okay, before distribution. So that is nothing but retained earnings are nothing but undistributed profit. Undistributed for profit. So why we will keep it retained earnings in the sense, in future, there may be any accidental losses. So some sort of any fund emergencies, right? So at the time, if everything is distributed, if any emergency comes, then they need to check for sources, external and internal. So to overcome that difficulty, what companies or businesses will do is they will keep some amount aside. They will keep some amount aside to meet the future losses or any accidental losses. To overcome that, they will keep some sort of earnings side. So that is called a retained earnings account. That is a retained earnings. We call it as a. So retained earnings is a part of reserves. Is a part of reserves. Clear? And what is the difference between reserves and provisions? What is the difference between a reserves and a provision? Any idea? Did you heard about these two terms? Reserves and provision?
Yes, we.
Yes, right. What is the difference? What is the difference between reserves and provisions? Any idea? Whatever you know, just let me know so that we can go ahead. For example, I'm just taking an example here. You are working for an organization. For example, you are getting a salary of 50,000. It's not a net salary, gross salary. Okay. So out of this, so do you get total 50,000 gross salary every month? The same amount you are going to get? Yes. You will get as a gross, not net, not a take home salary. Are you going to get complete 50,000?
No.
No, right? There would be some sort of deductions, right?
Yes.
Right. For example, professional tax. That is mandatory 200. Right? PF. Right? And if at all any other deductions, normally these two are mandatory things. If any tax. If any tax, if it is, comes under a bracket, tax bracket. So here, what is this PF? What is this PF?
Provident fund.
Provident fund. What exactly the provident fund works? How does it works?
It will deduct from the salary.
Why they will deduct? When you will get this, are you go see professional tax? Are you going to get it back?
No.
How about PF?
We'll get back.
We'll get it back, right? It's a part of savings, right?
Yes.
From our salary. So government is insisting, made it as a mandatory that whatever basic you are getting from that, some percentage will be deducted and kept aside from your earnings. They are going to keep it aside as your savings. It's a mandatory for every employee. Correct? As per Employee Act or Employer Act, every employee has to maintain some sort of PF, right? It's not a voluntary, it's a mandatory, right? Okay. Out after that, you are getting a 48,000 after deduction of all. For example, you are getting 45,000. Okay. Now this is your net take home salary. Net take home salary, right? This is nothing but your reserve, which is a mandatory, right? Net take home salary. Now, after meeting all expenses, you are spending total 41,000, all expenses, whatever domestic expenses and all, everything, medicine and all. So what is the left out amount? What is the left out amount after 45, 41, you are spending completely?
4,000.
4,000. See, will government will ask you to maintain, to save this amount 4,000 every month? Will
No.
someone insist you to save 4,000 every month?
No.
No.
It's one. So I don't want to save anything. I will spend this also. Clear? Or I am maintaining every month 2,000 as a savings. I am voluntary maintaining. Clear? Every month, because we may expect any sort of future losses, right? So is it a mandatory one or voluntary one?
Voluntary one.
Voluntary one. Clear? So in the same way, here company made, as per Companies Act 1956, every company has to maintain, okay, compulsory, every company has to maintain a reserve, no, sorry, provision. Sorry, this is not a reserve, this is a provision. And this is a reserve. Okay. Every company has to maintain, as per 1956 Act, every company has to maintain a provision mandatory out of its capital. Out of its capital. It's a mandatory. What is a provision? See, we will call it as a provision for doubtful debts, provision for bad debts, right? Reserve for bad debts, reserve for doubtful debts. So we are calling it as a provision for bad debts, reserve. Are both are the same? No. Provision for bad debts is, as per company, it's a mandatory. As per Companies Act, it's a mandatory to maintain. But reserve, it's your wish. Voluntary. If you want to maintain, you can maintain, or else you can ignore that. So see, provision will be maintained on capital. Whatever investment your total salary you are getting, on that compulsory they are deducting PF, right? When you are going to maintain this reserve, whenever out of your net salary, if some amount, surplus amount is there with you, then only you will maintain this savings. That is nothing but reserve. If you don't have, you are not able to get the surplus amount from your net salary, then can we maintain everything we are spending total 45,000? So can we maintain any savings? Yes or no? 45,000, whatever I am receiving, and I have all the commitments which I'm supposed to spend. So can we maintain any sort of savings?
No.
No, right? So here reserve is nothing but whenever we have a profit, then only reserves will be maintained. Retained earnings, whatever we are calling. Whenever there is a profit, then only reserves will be maintained. But when it comes to a provision, it's a mandatory as per the Companies Act. Understood? So here, whenever we're talking about reserves or retained earnings, whenever there is a profit to the company or a business or a sole trader, then only we will maintain reserves and retained earnings, right? All whatever provision, or so for government provident fund, for government is deducting, right? So this provident fund, is it an asset to the government or a liability to the government?
Liability.
Yes, why?
It is need to get back.
Exactly, give it back to employee at the end, correct? At the end of the day, whenever after completion of 5 years or left the organization, if they'll apply for repayment, then government has to repay back. So something which we need to repay back, then that is considered as a liability. And same time, as a business, we are keeping reserve. Some amount we are retained earnings, means out of profits, we are keeping some amount asset, and the remaining amount we are giving to the owner. And whatever amount we are retaining, we are keeping with us. Okay. At the end, to whom we need to repay back? At the end, whatever reserve or retained earnings we are keeping with us, as in the sense with the business or a company. So to whom we need to repay back? Yes. We need to repay back to owner or shareholders. Correct or not?
Yes, yes.
Whatever amount we are retaining, that's not our amount, that's a owner's amount or a shareholder's amount, right? We are keeping with us for future any losses. If no losses occurred, then what we need to do? We need to repay back to owner. So that's the reason, something which we need to repay back. Here I'm calling it as a, which we need to, we in the sense company. We need to consider ourselves as a company, right? So which we need to repay back, then that is considered as a liability. So that's the reason we will show reserves and surplus, provisions, and all those stuff we will show it as a liability side of our balance sheet. Is this clear? That's the reason capital, owner investment. At the end, we need to repay back to owner. So that's the reason capital will be shown as a liability. So any questions on this? Yes, no.
No, clear.
Next one, the most important topic is, put a heading as an, next topic is fiscal year variant. Heading as a fiscal year variant. Fiscal year variant. Put a heading as a fiscal year variant. Next global parameter is fiscal year variant. So most of the questions in interview we are going to get on chart of accounts and fiscal year variant. Write down. Fiscal year is nothing but a financial year. Fiscal year is nothing but, okay, the same financial year in SAP, we call it as a fiscal year. For example, I'm calling it as a financial year and fiscal year. Okay, financial year. Okay, this is general terminology. Financial year is normal business terminology. Fiscal year is nothing but SAP terminology. What is the current financial year? Normally, India financial year is April to March. Clear? So I'll take like this. 1st April 2023 to 31st March 2024. Correct? Okay.
Yes.
So here, what is the financial year? Which financial year we are in? We are in the income tax terminology. We call it as a 2023-24 financial year. 2023-2024 financial year. Okay, next one. And US financial year starts with, normally, majority states in US, not all US states will follow January onwards, but majority US states follow their financial year
Jan 1st to 31st.
January 2022, 31st December 2023. So here they'll call their financial year as they'll call their financial year as 2023 financial year, because they are not changing. This is called a calendar year.
So January 2023 to December
Sorry. Year wrong.
2022, right?
23.
23.
Okay.
Because we
Yes.
are already entered into 23, right?
Yeah.
Okay. So here 2 years are included. Here only 1 year is included. So when it comes to SAP, so in SAP, we need to maintain normal periods and as well as the special periods. In SAP, I'm talking. So we have normal periods and special periods. So I'm talking period. Period is nothing but it's a month, right? In general, we call it as a month, but in SAP, we are going to call it as a periods. Which period we are in? Now we are in first period. That is nothing but April month. So in general, month is nothing but in SAP, it's a periods. So total 12 normal periods. Okay, 12 months normally. Here we call it as a month, and here we call it as a periods here. Okay, normal period starts with 01. Okay, normal period starts with 1 and ends with 12th period. And special period will start with 13 and ends with 13 and ends with 16. Ends with 16. So what is the difference? What is the usage of the special periods in the sense? For example, we will do our year transactions from first month to 12 months. Okay, 1st April to 31st March. Okay, once after 31st March, once the fiscal year or financial year is closed, then we will hand over this books of accounts to auditors. It could be an internal auditor or external auditor. We will hand over those books to auditor. Okay, so after that, after handing over these books to auditors, after that we will do our regular activity. As an end user, we will do our regular activities. We'll start posting the entries. But what auditors will do? Okay. So after they are doing, there are number of transactions are there throughout the year, right? So when they auditing, they found that some of the transactions are missing. Means the end users are not entered few transactions, and some transactions, okay, they have entered incorrect. Okay, so there is a possibility of missing entries, wrong entries, right? So those adjustments after closing of books, whatever adjustments are we need to do, because that is related to this fiscal year, this particular financial year. So the auditors will track, right? In 13th month, they have tracked, right? And they will adjust directly in this particular books. What do you mean by adjustments? Why we call it as an adjustment entries? Adjustments are nothing but once books of accounts are closed. Means books of accounts are closed in the sense, again, see, books of accounts, when it will be closed, I'll tell you. So in manual accounting, what they will do, our accounting cycle starts with journal, and in the initial year, we will open ledgers. 2 books of accounts we will open, journal and ledger. Okay, throughout the year, 1st April, we will open 2 accounting books. One is journal and next one is ledger. So everyday transactions we will record in journal, and after that, that will be posted into ledger. that will be posted into ledger. So this is start on 1st April. For example, when we are going to close our books of accounts, 31st March. For example, what I did is we have closed on 25th of March. What do you mean by closing of books? Nothing but ledger. We will do the ledger totals and balances. Closing of books in the sense, what does it mean? Once we close the balances of ledgers, once we do the balance ledgers or totaling of ledgers. So here, whatever may be the ledger, that will fall under 3 accounting groups, 3 accounts. One is these ledger, 1000 ledgers are there, 1000 accounts are there. So each account either fall under personal account, real account, or a nominal account. Clear? What thousands or lakhs of accounts are there in the business. For example, if you take Reliance Group of Industries, they have a lakhs of accounts. So whatever may be the ledger account, either that will fall under personal account, real account, or a nominal account. That's it. Only 3 accounts that will be classified under 3 categories, 3 accounts. So what is the thumb rule of ledger accounts in the sense? What is the thumb rule of ledger account is? What is the thumb rule of ledger account is? Personal and real accounts are supposed to be balanced. Very important. This is supposed to be balanced. We know that personal and real accounts are supposed to be balanced, whereas nominal accounts are supposed to be totaled. So what does it mean actually? So whenever, for example, if I take personal account, I'll take one example. I'm going with the core accounting. Purchased goods from X on credit. Okay, on credit 10,000 on 5th of April. 5th of April. So what would be the entry? Purchases account. Can you tell me what is the entry? What would be the entry for this? Please respond back. Am I audible?
Yes.
Purchase account data to X account.
Sorry, please come again.
Purchase account data
Purchase account data
to X account.
X account. Perfect. Everyone, is this the correct entry? Whatever he said? Hello?
Yes,
Yes.
sir.
Who said yes?
Shivani, sir.
Shivani. Perfect, Shivani. So can you please read it once again, this particular entry?
Purchase goods from X on credit 10,000 on 5th April. So entry would be purchase account data to X account.
Is it correct, everyone? I want answer from everyone.
Yes.
Perfect. 1. Shivani already given. 2. Next. Is Sana there? Arif. I'm able to see all, but I'm not getting responses from all. Only for this, I need it. Spandana, is that correct?
Yes, Naveen.
Yes.
Sudha. I'm sorry, taking.
Yeah, Naveen.
Perfect, right? No. Yeah, entry is correct. Entry is perfectly correct. Purchases account. What is this? Purchases account?
Data.
No, never call it as a debtor because debtor is a person. Debtor and creditor are the persons. We are not supposed to pronounce it as a debtor. It is nothing but purchases account debited. If you call it as a purchases account debtor, which means that it is a person. Debtor is a person. Nothing but debtors are nothing but an asset to the business. Clear? Never ever pronounce it as in the entries as a debtor. Okay. Purchases account debited. I'm stressing out again and again. We will see this again and again, every transaction. So never ever pronounce it as an debtor. If someone is pronouncing, just correct them. Debtor, we know that. Who is sundry debtor, sundry creditors. Correct? So never call it as an debtor. It is nothing but debited. Purchases account, sorry. Purchases account debited to X account. So if you're calling it as a debtor, then it will take in a different way. Hope I'm clear.
Yes.
So on 5th April, we purchased these many goods from X. So are we paying right now?
No.
No, right? So the entry would be, for example, if I take X account, I'm preparing X ledger account. So X account is a personal account. Hope everybody knows. Right? So here we will write it as an how much amount we are supposed to pay. By purchases, we need to pay 10,000. Correct? And on same time, cash paid to X 7,000 on 15th August 2023. So what would be the entry for this? What is the journal entry for this? We are paying cash to X. What is the entry?
X account debited
Perfect. X
to
account
cash.
debited.
To cash.
So 7,000 to cash. 7,000. Okay. So here we are paying him a cash. So we are paying cash of 7,000 and we will write it as an on the debit side. To cash. To cash 3,000. Sorry, 7,000. So we are already paid 7,000. So on 25th March, we are closing our books. So what is the balance we are supposed to pay? How much balance we are supposed to pay?
3,000.
3,000 or 10,000 or 7,000?
3,000.
So balance. Clear? So in your balance sheet, how much amount you are going to show as a liability? 10,000 you are going to show or 3,000 you are going to show?
3,000.
3,000. So we will write it as an to balance carried down 3,000. Right? So personal, as again I'm mentioning here, what is the thumb rule? X account is a personal account, right? So personal account and real accounts are supposed to be balanced and nominal accounts are supposed to be total. Clear? And one more thing, this particular Sunday 2:30, we are combining all the batches for means if you require, then you can attend the complete accounting, financial accounting, the basics we are going to cover. Why and what with the reasons. What do you mean by journal? What do you mean by ledger? Why we need to do the balancing of personal real account? Why we do a nominal account? So if anyone are interested, let me know so that I can share. So 2:30 to 5, the session would be on Sunday, coming Sunday. But almost all the batches will be clubbed in that. Okay. So here, so 7,000. So personal and real accounts are supposed to be balanced, whereas nominal accounts are supposed to be total. So nominal account items, whatever totals we do here, that will be transferred to profit and loss account. Transferred to P&L account. That is nothing but your profit and loss. And balance sheet balanced amounts will be transferred to your balance sheet. Balance sheet. Okay. So where are we? Okay. So here we are closing the books in the sense whenever we do the totals of nominal accounts, whenever we do the balances in our ledger of real and personal account, what does it mean? We are closing the books partially for that particular year, Okay, on which day we are closing? On which day we are closing?
31st March.
Not 31st. We are closing on 25th March. Because I need to do financial trial balance also, right? So it will take at least 3 to 4 days or 5 days to complete throughout the year trial balance. I need to prepare. So it will take at least 5 to 6 days. So that's the reason I'm closing my journals and ledgers on 25th March. On 26th March to 30th March, 26th March to 30th March, 30th March, we will prepare a trial balance. How we can prepare the trial balance? Whatever ledgers we have done, from that only we will extract the balances and we will prepare trial balance. Clear? So once trial balance are prepared, once trial balance is prepared, then what does it indicate? Which means that the books of accounts are closed for that particular year. Okay. But so once we have closed on 31st March, then we are going to hand over these books till trial balance. We are going to hand it over these books to auditors, right? So they will check all the journals, ledgers, trial balance, okay? And we will prepare rough draft of your profit and loss account and balance sheet also, right? So here on 13th period, nothing but April month, auditor found in first 10 transactions they have checked, they found one error and one missing entry. One error and one missing entry. One entry we have missed. Voucher we have an invoice copy, but we have missed to enter that particular transaction in books of accounts. So now we can't ignore that for this particular year. Now can we enter into our journal that particular entry?
No.
Can we write a journal entry for that again?
No,
And after that, can we enter into ledger?
no,
No. Why? Because we have already closed the books.
yes,
Correct? So whatever we found after closing of books, right? So we need to enter compulsory. We need to show in our profit and loss account and balance sheet for that particular year. Then what we will do? We will directly adjust. We will directly adjust in our financial reports. We will directly adjust our financial reports. So that's the reason we call it as an adjustments. Means, see, in our degree or intermediate on your PG, you can see that they will give you some trial balance and under that they will write an adjustments. What do you mean by that? What do you understand by that adjustments? Means after closing of books, there are some transactions are taken place. After closing books also, few transactions are taken place. And that we can't fit in our journal or ledger because they have already closed. And those transactions, we need to fit directly in our final accounts. That is nothing but your trading profit and loss account and balance sheet. We need to adjust them accordingly. So that's the reason we call it as an adjustments. Clear? Any questions here?
Is that also called accruals?
Yeah. If it is outstanding, we'll call it as an accruals. Clear? Anyone have a questions on this? So if my SAP has provided total 4 special periods, nothing but if you take a Reliance, they have a n number of transactions. So audit cannot be complete in 1 month. It may take more than 3 months or 2 months. Clear? So 1 month they have done only one part. So whatever they have done, they will adjust in 13th period. And few more adjustment, a few more audit need to be done, right? That will be taken in 14th period. And still they have not completed. One more period, 15th. Still they have not completed. Maximum how many special periods we can do in SAP? 16 as per the requirement. Clear? We can have 1 period, 2 periods, 3 periods, special periods. Maximum we can have 4 periods. What is a special period object? We can do the adjustments and that can be done directly fit into your final accounts. Is this clear, everyone? How many periods we can have? Maximum in the sense 16 periods. Nothing but extra periods are 4. apart from your 12 normal periods and extra special period 16. It's not mandatory that every company will open 16 periods. No, as per their volume of transactions. If transactions are more and more, then probably they require for audit purpose 4 periods, 4 months. Clear?
Yes.
Yeah. Any other questions? Any other questions on this? Any questions here?
No, sir.
Okay. So here we have 2 years, right? April to March, and again March we are closing books. Special periods are going to April, May, June, and July. So here this complete thing we call it as an fiscal year 2023 only. 2023 only. Clear, everyone? And here also same thing, Jan to December also same thing. As same it will follow calendar year. So this is called non-calendar year and this is called calendar year. Normal periods. So first period. January is the first period and December is the 12th period. And here also 13th period, next year January, but it is considered as the same fiscal year. And 16. This is nothing but January, February, March, April.
And when they do adjustment or accruals, they have to use posting date as March and December only, right?
Yes.
They can't use the 13 and 16 periods.
Sorry?
They cannot use 13 to 16
No,
period.
automatically it will pick because whatever configuration we are going to do, it will pick it as in same 13th period only. But it here as in 2023. So we have year fiscal year. I'll explain that also. There is a concept called year dependent and non-year dependent. So in the configuration, we are going to select non-year dependent. I'll tell you that.
Okay.
But the fiscal year, that extra 4 months also, it will take, even the year getting changed here, but it will take fiscal year as in 2023 only. So whenever you see 13th period, when you are doing, again, checking your books of accounts, last year books of accounts, if you find a period as in 13 or 14 or 15 or 16, then by checking at the entry, you need to understand that these are adjustment entries, not your regular entries.
Okay, got it.
Yeah. Yeah, next one. And SAP provided, see, the few standard fiscal year variants. What do you mean by a variant? What do you mean by a variant?
Discrepancy.
Variant, see, why we call it as a COVID variant? You heard about it, COVID variant. What do you mean by COVID variant?
Format maybe like that, right? Format.
No, nothing like that. What does it mean in the sense? See, if a person is affected with the COVID, then probably what are the different attributes he may have? He will get in the sense, probably body pains, high fever, cough, right? Flu, right? Headache, or whatever different. See, some people may have these features. Some people may have only fever, cough, and cold. Some people may have cough, cold, and body pains, right? So different features we are clubbing under one. Then that is considered as a variant. Different features are there. We call it as that symptoms may lead to COVID. If a person is having only fever, cold, and cough, then that could be lead to a COVID, corona. Same time, a person is having a high fever, headache, body pains, plus flu, cough, throat pain, all this, then that can also lead to a COVID. And a person is having no fever, but still they are having a high cold, and high cough, then that can also lead to a COVID. So these are the different features of COVID. So if we are clubbing under one and we are calling it as a COVID variant, so that could be anything as this. So same thing here, SAP has given different fiscal year variants, SAP standard variants. SAP standard variant is nothing but clubbing different attributes under one, is nothing but a variant. So here SAP has provided few SAP standard variants. SAP has provided V3. This is SAP provided variant. Okay. So what is V3 is nothing but April to March. April to March plus 4 special periods. V3. Okay, so we have few more. V6, July to few countries follow their fiscal year as in July to June. Plus 4 special periods. Okay, next one we have V9. October to September. Few European countries follows their fiscal year October to September. Next one, A4. Jan to December plus 4 special periods. So these are SAP standard one. Okay. See, means there are different attributes. I'll explain what are the different features will be there. So here V3 in the sense Indian fiscal year April to March with 4 special periods, right? This one, the first one, right? So here what we are going to, if we want to create fiscal year variant, 99.9% companies in real time, okay, they want to create fiscal year. They want to create a fiscal year. What they will do is either they will follow as it is V3, okay, in their real time, V3, they will take it as a fiscal year variant and they will continue. That's it. Okay. And few what they will do, they will copy this variant. They will copy this variant. Okay. 99.9% I'm telling. They will copy this variant and they will give the other name for this. For example, ours is a Birla, right? So we are going to copy this. We are going to copy this variant. We are going to copy this variant. So we can give our own name. For example, I'll give it as a BV. B stands for Birla fiscal year variant, BV. 2 characters we can give. That could be one numeric or one alphanumeric or both alpha or both the numerics. Anything we can give it. So what we are going to do, we are going to copy this variant and we are going to give a name called BV. Birla, we are not creating here. What we are doing, we are just copying this variant and we are naming our own name as Birla variant. That's it. So whatever attributes are there, there are number of attributes, 493 attributes will be there and all near about 493. Okay, all attributes will be copied from V3 to BV. If you want to create, then you need to give that 493 attributes. I'll show you that what are the different attributes. This is clear, everyone. So instead of normal in real time also the consultants, what we will do is we are going to copy the standard variant and we will give our own name, or sometimes majority companies, they will follow as it is SAP standard variant. Why SAP has given a standard, these kind of things in the sense, instead of wasting the time, just they can copy and they can use it. or they can use directly the standard variants. Is this clear? Any questions here? So we are going to copy V3, right? Our company is Birla, so we are going to give BV. Is this clear, everyone?
Yes.
We are going to assign this variant to our 3 company codes. What are our 3 company codes? BI01. We are going to assign our 3 company codes. That is BI, right? BI01, BI02, and BI03. So, and here, see, BI01 is an Indian company code, BI02 is a Indian company code, and BI03 is a US company code. So here we are going to use this K4 also when we start our new GL accounting. Now, as of now, we are doing the classical GL accounting, and after that, okay, in the next coming classes, we are going to see the new GL account. At that particular point of time, we are going to copy this K4 also. Okay, because for this particular company code, we need to follow Jan to December for reporting purpose. Clear?
Yes.
Any questions here? So we are going to copy. We have copied V3 and we have copied this variant and we have assigned to BV. Remember this actually variant name. If you want, you can write it down. We are going to copy this BV variant. Okay, how this V3 variant is defined by SAP, we will see what are the different attributes here. Okay, for example, as we know that V3, what is V3? April to what is V3? April to
April to March.
March with 4 special periods, correct?
Yes.
4 special periods. So how it will work in the sense? Month end date, month end date. So here try to understand this period, year shift, year shift. So first I'll explain this, then next we will see this. Month end date, first period. What would be the month end date? April month?
30th of April.
30th of April, right? So I'll take month here. 30th of April, perfect. So we are in which year? Which fiscal year?
23.
2023. I'll type here that 2023 also. So how system understand? I'll tell you. So system automatically prepares 04 2023. What is the month end date? 30th. Correct? So which period we are in?
04.
First period, right? Of 2023. Correct? So
Yes.
here 2023 minus 2023. 2023 minus 2023. What would be the result?
0.
0 means year shift would be 0 means how, as we know that, see here, how many years are there in this particular fiscal year?
2 years.
2 years. So how system will understand whether is it related to 23 or 24? So here it will check your physical year with the period year, right? So the period year minus, sorry, the physical year minus period year. It will do. System, how system SAP will do? Physical year minus period. Okay, it will be 0. Next one. What is the next month? 05 2023. Okay, 31st. So this is second period. Second period, 2023. So what would be the year shift here?
1.
What is the year shift?
0 again, right?
0. Because 2023 minus 2023. Okay, then next month would be 06 2023, 30 days. So period is third period, 2023. So what would be the year shift here?
0 again.
0 only. So like that, I'll take one more month, 07 minus 2023, 31. Which period is this? Fourth period of July. So 2023, 0 fiscal year. Year shift is 0. And if you, so July, August, September, October, November, December. So for example, we are in December. So that is nothing but 12th month, 2023. So what would be our, how many days? In 12th month, 31. Right? What would be the period?
12.
December would be 9th period, correct?
Yes.
Right. April is 1st, May is
Yes,
2nd, June, July, August, September, October, November, December. So that would be 9th period. So this is same year. So what would be the year shift?
0.
0.
Now we are entered into, okay, January 2024. So 31 days. This is my 10th period. 2024. So what would be year shift?
1.
-1.
-1, exactly. 2023 minus 2024. 2023 minus 2024. So that will become -1. So system will understand whenever we have mentioned it as an year shift, then from current period, it will do -1. Then automatically, what is the fiscal year? It will become 2024 -1.
23.
23 only, right? So again, next. Sorry. So here, February 2024, 28 days, for example, 11th period of, so what would be the year shift?
-2.
Minus
2.
-1 only, sir.
-1. -2 in the sense it will take 2023 -2, 2021 it will become. Sorry, 2024 -2 in the sense it will become 2022 fiscal year. Here also 2024 and it will come 2023 minus 2024. It's a -1 only. Understood?
Yes.
Yes.
Again, last month 03 2024 31 12
24.
2024. So 2023 minus 2024. What is the year shift? What is the year shift?
-1.
-1 only, right? So -1. So this way, the SAP will understand. So in V3, these all calculation, whatever adjustments are there, that is already performed in V3. If you want to do manually, then you have to do everything step by step every time. If you copy V3 and you made it as in BV, then automatically these all features will be copied and it will be kept in this particular thing. Is this clear? Understood?
Yeah,
everyone?
got it.
Sorry,
Yeah, I get it, answer.
I didn't get you.
I mean, these features all copied by the V3, right?
Exactly.
Yeah.
Okay. Any questions? This year shift concept. We will see. Just
And
we
the
will.
special period will also so on, right? Same
Sorry.
thing. Special period.
Special period is also same thing. If you say April 2024 -1 again,
Okay.
right? For special periods, same thing it will follow, and it will take 13th period instead of 12. It will take 13th period. The same thing. For example, if you take 04 2024 30, so it will take it as a 13th period, special period 2024. So what is this? -1.
-1.
If it will take 0, then it will go to 2024 fiscal year, not 2023 fiscal year.
Okay.
Clear? Because here -1, that's the reason it is taking 2023. Clear, everyone? Any questions here?
Clear, sir.
Okay, just write it down. We will do one configuration step and we will close it. So just simple. Define fiscal year variant. Define fiscal year variant. Write down the path. SPRO. SAP reference IMG. Financial accounting new. Financial accounting new. Financial accounting global settings new. Financial accounting global settings new. Ledger. Next, fiscal year and posting periods. 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 Next one. Maintain fiscal year variant. Maintain fiscal year variant. Transaction code. Transaction code. Okay. Transaction OB29. Write down. Next, under that, write down a note. Write down a note. Physical years are two types. Physical years are of two types. That is calendar year, and second one is non-calendar year. Calendar year and non-calendar year. Write down. Calendar year. Calendar year. If we define any physical year, from January to December, okay, from January to December, then that fiscal year, we can call it as a We can call it as a calendar year. Calendar year. Okay. What is the variant for calendar year? SAP standard K4. Right? K4 is a SAP provided standard calendar year. Jan to December plus 4 special periods. Next one, write down non-calendar year. So if you are taking K4, which means that starting with January, ending with December. Next one, non-calendar year. Non-calendar year. Non-calendar year. If we define any fiscal year, other than Jan to December, that fiscal year, we can call it as a non-calendar fiscal year. Non-calendar fiscal year. So anything V3, V6, V9, April to March, July to June, October to September, right? Other than calendar year, all others are non-calendar years only. Okay. Any questions in this?
No questions.
So there is one more category, write down. Under that only note, year dependent / non-year dependent fiscal years. Year dependent / non-year dependent fiscal year. Year dependent / non-year dependent fiscal year. Under that, write down first one, year dependent. Write down year dependent. First one. If we define any fiscal year, as year dependent, the periods and end dates, to be maintained, manually every year. The periods and end dates to be maintained manually every year. Okay, next one. Non-year dependent. Non-year dependent. If we define any fiscal year, as non-year dependent, the periods and end dates, to be will update automatically based on calendar year. based on calendar year. Is this clear? So in the same non-year dependent, automatically it will update. Okay, it will automatically updates. We need not to mention every year. Automatically it will take, if once 2023 is done, then automatically it will take 2024. Okay, so one more category is there, short-end fiscal year. Write down this. Sorry, short-end fiscal year. Short-end fiscal year. Short-end fiscal year. Short-end fiscal year. Write down this. If we define any fiscal year, if we define any fiscal year, if we define any fiscal year, if we define any fiscal year less than 12 periods, if we define any fiscal year less than 12 periods, that fiscal year, we can call it as a, that fiscal year, we can call it as a shortened fiscal year. Shortened fiscal year. Shortened fiscal year. Understood this? Okay. See which fiscal year we are following? V3. V3 in the sense April to March. Correct. So if my business is an existing business, so every I'll start my books of accounts on 1st of April and I'll close it on 31st of March. But in this year, my business is new, right? In 2023 fiscal year, I have started my business on 1st of August or 1st of September, right? So do I open my books of accounts from 1st April or 1st September? When I'll begin the transactions? 1st September or 1st of April?
September only, right? Short end.
September, 1st September, right? So
Yeah.
to close the year, how much? September, October, November, December, January, February, March, April. 9 months time.
Yes, short end.
So this is, so in a year, if we are defining our fiscal year, only less than 12 months, then that is considered as a shortened fiscal year. Clear, everyone? So for example, my business is an existing business. So in this particular year, due to some losses, what I did, I have closed my business in the month of September. So I'll show the books of accounts throughout the year, or 1st April to 30th September, I'll show.
September 30.
September. So is it 12 periods or less than that?
Less than.
So it is a short-ended fiscal year.
Yes.
Okay. So the configuration part, we will see tomorrow session, just to go through the literature part once again, because we will have a lot of questions on this.
Okay.
Yeah. Okay. Okay. So first we will see tomorrow session, the configuration part. So before that, I request everyone, just go through once, give me a 10 minutes time and go through this particular literature, whatever you written, just check it out once. What is fiscal year V3 and all those stuff. Okay. Thank you all.
Thank you.
Thank you.
See you tomorrow session.